Hey friends, I am back with another video about dividend stock investing. I am here at the park. I have to head to the airport literally really fast. And so I'm going to go through this video in a one take. Hopefully it goes all right and not too many edits. I want to go really quick today. I want to share the dividend stocks that I am purchasing right now in November and December of 2023. I'm really excited. I have 3 stocks to share, actually 2 stocks and 1 ETF. I also want to go through a quick life update and also a YouTube channel update because I know a lot of you are wondering, Ian, why are the videos just a little bit slower and more spread out these days? And so I want to go through that, but also I want you to know the frequency will be back as I head into 2024. So I've got my notebook, as I always do. This is important. Remember the notebook from the early days. This is going to make a comeback. This is going to be a tool that I can use to get these video updates out to all of you more frequently. I don't want to polish the videos so much. I just want to get the content out there. So what are the 3 stocks or the 2 stocks and the 1 ETF I want to discuss today? The first one is Johnson & Johnson. I'm really excited. My patrons already know this. I will link to my Patreon in the pinned comment below, but I have been purchasing Johnson & Johnson stock again, and I plan to put this into heavy rotation and to buy more and more Johnson & Johnson stock. The thing has fallen off of its 52-week high quite a bit, so that caught my attention, but then when I started looking into the numbers, I was really impressed. What I was most impressed is recently, just last week, I purchased a tranche where the forward PE, the price earnings ratio on 2024 estimated earnings for next year, is actually dipped into the 13 range. And that is probably the first time in all of my years of investing in Johnson & Johnson stock that I have ever seen the PE, a forward PE. I know it's for next year and it's based on analyst estimates, but to see it dip into that range was pretty astounding for me. Now, also in terms of J&J, it has a starting yield of 3.2% qualified dividend. This is a meaningful starting yield for me on J&J. Yes, the compound annual growth rate on that dividend is a little slower, but this is a core stock of mine and I'm excited to accumulate more shares here. So that one has been top of mind for me. And shout out to my subscribers, because a few of them have brought that stock up to me and said, hey Ian, look into J&J a little bit more. So the next stock that I want to cover today is actually a REIT. It's a real estate investment trust, ticker O. It is Realty Income. In my last video, I'll link to that in the pinned comment below. Many of you know that I just increased the position size on Realty Income substantially. I increased it by 50%. Then they went ahead and they acquired a company, or they announced intentions to acquire a company called Spirit Realty. The stock tanked, or the REIT tanked. Now it's back up. Now it's above where I bought it. That's just how funny the stock market is and why it's so important to have conviction. Because if I did not have conviction in Realty Income and I just didn't really believe in what I bought, on this Spirit news, I could have just sold the thing and lost money. But no, I have conviction. I believe they're making strong acquisitions. I can do some more content on that acquisition in a future video, but that's there's not enough time for that today. But what I love about Realty Income right now is it has a starting yield of about 6%. Now it's dipped below 6% because the stock has recovered a little bit. But I love that for Realty Income. And what I like even more about Realty Income is when I look at the adjusted funds from operations, the estimates provided by the company, and I look at even the low end of that range, and I look at the current price, I divide by the AFFO, I get a forward kind of PE ratio equivalent for this stock of 12. It's in the 12s. And so just like J&J is in the 13s, it's probably not there anymore because it's recovered in the last few days. Same with Realty Income's been recovering. The stocks have been going up a little bit, but I love these valuations. And so what I love is the valuation, but I also love the starting yield. Now on Realty Income, that's not a qualified dividend. It's a REIT, a real estate investment trust. So they have favorable tax advantages at a corporate level. And so the taxes do get passed on at the investor level. And so it's not a qualified dividend. But nonetheless, around that 6% range, I like it, and I'm still buying. Even though I increased my position size by 50%, I keep buying more. And now the third stock, or ETF, I wanted to cover today was SCHD. And so I haven't talked about it for a while, but yes, I am still accumulating units of SCHD. And actually what I'm doing on this one is I am diversifying my portfolio because it's a broadly diversified ETF, but also what I'm doing is I'm de-risking the portfolio. I talked about this on Patreon in my last post. I try to do some blog posts there that accompany my stock trades. But what I shared really is that SIN stocks, they represent a pretty good chunk of my portfolio, and both in terms of value, but also in terms of cash flow. And so what I'm doing these days is when I get a distribution from a SIN stock, I'm actually moving those funds over into SCHD because it immediately de-risks the portfolio and it immediately offers diversification. What I like about SCHD here is it has a PE ratio in the 13s, and that's based on trailing 12 months to my knowledge, and the yield is about 3.7%. That's a solid yield for SCHD, and that's a qualified dividend. Now, one of the kind of food for thought I wanted to leave some of you with today, or all of you with, is SIN stocks. SIN stocks are a little bit riskier these days than they have been in the past, and so stock like Altria, for example. And what's interesting is Altria right now, it's yielding almost 10%. Kind of how I'm looking at Altria these days is I'm not reinvesting, I'm taking the dividends. And if I just take 10%, even if the dividend doesn't grow here, over the course of 10 years, I've completely de-risked that investment because all of my principal has been returned. Now, if they increase the dividend steadily, say 4 or 5% per year, it will get de-risked even quicker, perhaps, as that dividend cash flow gets even bigger. But what I'm doing here is I'm looking to take my chips off the table, so to speak, with the SIN stocks. I'll still have my position, but the capital will have been returned through the dividend distributions, and then I'm putting it over into SCHD, which is obviously at a lower yield, and so the snowball won't grow as quickly. But for me at this stage in my investing journey, I prefer the quality, the diversification, and just the peace of mind, the sleep well at night factor that comes along with an ETF like SCHD, and it will de-risk the portfolio. So those are the three positions. Obviously there's a lot more, but those are the three I wanted to highlight today. And so I wanted to go into a few quick life updates as well, because I know many of you have not heard from me for a while. Hopefully you follow me on Instagram and Twitter, because I'll link to those in the pinned comment, and I do provide a few more updates over there. But here on YouTube, it's been a while since my last video, so thank you for hanging in there. Some of the big life updates is just 2023 has been a very big year for me at work. I've done more real estate deals this year than ever before. And so I have really been kind of striking while the iron is hot, and doing the deals while I can, while I have the energy, while they're present, while they're available to tackle. But because of that, I've been working extreme hours. And so that's one of the reasons that the YouTube videos have been slower. But as I look forward to 2024, I just don't envision the pace of work being quite as extensive, and so I will be back. I will be posting more frequently. So thank you for all of you who have been hanging in there here on YouTube and on Patreon as well. Also, in terms of some life updates, I'm really big into fitness these days. We've been participating in F45, which is a high intensity training program. We just reached, my wife and I, our 50 class milestone, and we're part of the F45 challenge. I'm seeing some real results from that program. I'm seeing some gains. I'm back in better shape than I've been in years, and so I'm really excited about that. But that's been taking some time as well, but it's an investment of course worth making, and it will only allow me to live longer and enjoy these dividends for more years to come. I would say in Idaho we're still kind of moving in. We love Idaho. We've been there for a year and a half or so at this point, but what I would say about Idaho is it really opened our eyes. There's a lot more to life that you kind of have to learn in Idaho about the outdoors, about self-defense, about things like just kind of basic skills, life skills that you might not acquire in kind of the tech bubble of Silicon Valley, if you will. And so there's still been a lot of kind of these move-in checklist type items that involve not only kind of moving into the house, but really getting into an Idaho state of mind and enjoying everything that Idaho has to offer. And I would say we are just so happy. Things have been really good there for both my wife and I, but the kids as well. And so also what I would say, just on a last note there, is we've been kind of making up for lost time. We put in a lot of years of hard work in our earlier years, and I'd say a lot of just life skills we didn't attend to quite as closely, especially the fitness related stuff. And so now it's really exciting to take more time for those types of life skills. And so also I want to just say, in terms of a YouTube channel update, I will be back. 2024 is going to be a year of a renewed focus because things slow down at the main job just a little bit, because things have been real busy there this year in a good way, but also I'm looking forward to being back. And I just want to request your feedback in the comments below. If these types of impromptu videos with the notebook, taking it back to the old school thug life, kind of backyard blogging days. If that's okay with all you, put in the comments below, because I'll tell you, one of the things on YouTube I've faced a little bit is of creator burnout. I've heard about this from other creators as well. It just gets to a point where doing the really polished videos that are really just completely polished and edited and putting in the work, doing the slides, it can be daunting, and at a certain point you reach a level of perfectionism where you get scared even to put out a video because you're like, well, if it doesn't reach a certain bar, it's not good enough. But what I realized is I cannot do the YouTube videos, I cannot even publish them, I cannot bring them to the community unless I'm just more efficient with my time and I do them more impromptu. And also that's what I enjoy the most. I enjoy the more conversational tone of these types of videos. I enjoy just getting in the comments and hearing from everyone, talking about the stocks, making it more informal. I hope that's okay. Please put in the comments below what you think about that. And please click the like button if these types of impromptu videos are okay. I know the videography is not as good, the sound's not as good, the slides aren't as good, but I do my best here. I think some content is better than no content, and being happy with it, because YouTube kind of got to a point for me where it was so kind of heavily produced and it took so much time to edit the videos that it wasn't fun anymore. And that's probably a reason that I reached creator burnout as well. But now I'm just going to do what works for me, and hopefully it works for the community. I love you all. Thank you so much for watching the video today. If you did enjoy the video, don't forget to subscribe, because I will have a higher frequency of dividend investing videos on the way. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. Today's video, it's just for your fun and entertainment. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. Please do consult a licensed financial advisor before making any moves in the stock market. It's possible to lose money in the market. In terms of a full disclosure, I am long the positions mentioned today. I'm long Altria, ticker MO, SCHD. I am long Realty Income, ticker O, and I'm long Johnson & Johnson, ticker J&J. Please share in the comments below if you have any stocks you're buying right now. Thank you so much for watching, everyone, and I'll see you in the next dividend stock investing video.